Hey guys, Opsec here, and today I'm going to give you a market review on the S&P 500 and some other markets that may aid us in this analysis. So let's begin by analyzing what happened so far. So far, right, within this frame that's relevant, we traded up to this point, consolidated here, created a resistance, sold off, cleared these lows. Okay, now why are these lows important? These lows are sell-side liquidity. What do I mean? If you connect these two with a trend line and extend that out in time, then you will see that people would have connected these two lows, and then when price came back here, they would have bought. And then price comes back here, and they would have bought here as well. And then price trades up here, they would have sold. Okay? So what does that tell us? That tells us that all of these lows are trendline liquidity because people bought or sold there. Well, in this case, it would be sell side because these lows people bought at, right? Mainly this and this one, but this one might have some sell side because people might have stops over there. But the main lows with sell side, the main low with sell side would be this low. Okay, now let's take another perspective. Another perspective could be this. You connect these two lows, then when price trades back to it, you buy over here. Where would your stop be initially when you buy? Likely over here. So what does that mean? That this low has significant amounts of liquidity. What would be our next point that likely has a lot of liquidity? This. Why this? One, it broke structure to the upside and mitigated the discount. So people would have likely bought here and price moved away. So they would set their stops here now. Two, we broke this structure to the upside, traded back down to it and moved away, meaning that this low would be an invalidation for the people who bought here, but they would also likely have their stops here. So this low would be the main liquidity, and then this would be our drawn liquidity, okay? And you can see how we perfectly traded to both of them from up here to down here, delivered to the sell-side liquidity. Now, following that, once we clear the sell-side liquidity, what does it make sense that we will do? If we clear sell-side liquidity and tap into an imbalance, we are likely to clear some buy-side liquidity and tap into another imbalance. What have we done? Cleared sell-side liquidity, tapped into this gap, reacted, tapped into this gap. Now, what is likely to happen from here based off this logic? Well, from here, now that we cleared buy-side liquidity and tapped into a gap, you would want to see us now hunt sell-side again. However, why am I saying however? Let me show you why. So first off, let's begin by understanding the levels I have marked. Why did I mark this as sell-side liquidity? Well, the reason I marked this as sell-side liquidity is because this is a big ass support level, and we also had a consolidation down here, resistance, breakout, support, buy over here, price moves away, invalidation. This is a point with a lot of liquidity. Same as this one. We have a high, a violated, that's a deviation, come back to it, that's now officially a resistance, trade back to it again, that's now a resistance, trade back to it again and formulate a new resistance, it's still a resistance, and there's tons of buy-side liquidity here. So our major points of liquidity are down here and up here. However, I don't know, I'm not sure which one of these we will hunt first. So what am I going to use to understand this better? I'm going to go ahead and look at the bonds and the DXY. Why? Because bonds moving down means equities moving up. DXY moving down means equities moving up, and vice versa. Right? So when DXY is trending to the upside, equities will trend to the downside. It doesn't mean that each and every individual move of the DXY is going to be replicated inversely on the equities markets, but it just means that they are correlated. They have correlated assets, so they are going to move in the same direction. Or, I mean, in an inverse direction. Okay, so they're going to move in an inverse direction, and that's their correlation. So let's take a look at the bonds. What do we have at the bonds market? So on the bonds market, we filled a daily gap after clearing liquidity. Now and we also cleared the spikes of liquidity. Now where's our liquidity? These lows and this low, and that's our gap right over here. So where do my eyes go to? My eyes go to this daily gap in confluence with these sell side liquidity lows. These lows which are sell side liquidity. Why are they sell side? Because 1, we have a support level. 2, we have bullish structure. And they're relative equal lows. So now that we cleared this, filled the gap, we have cleared the spikes of liquidity and filled the gap. Now I'm gonna look for us to hunt these lows. So I'm gonna expect the next week to bring us down here. Now, a 1.5% move down on the bonds is typically a 1.5% move up on ES. Okay, so that gives me roughly an area where ES is likely to draw to. Boom, that gap up there. Now let's go to the dollar index. Dollar index engineered bearish structure and then cleared the buy side liquidity of it right over here. Then it shorted back down and filled this last BISI on the full hour. And what did it do? It did not react after filling that last BISI. By not reacting, it left a SIBI. The SIBI is a consequence of not reacting to this. What is that indicating? That's indicating lower prices. Now, I'm not basing my bias on us filling a BISI and creating a SIBI. I'm basing my bias on the liquidity. Now, where is the liquidity here? 1, we broke structure to the upside. So this low is sell side. 2, we have 1, 2, 3 lows here. That's support level. In confluence with the bullish structure and many other reasons to buy here from the retail standpoint. So I'm naturally going to look at this level right over here as a sell side draw on liquidity. What else am I going to look at? Well, right over here is a new day opening gap. On the daily chart, you will see it. So there are a few confluences for us to come down to this level. And then our first fair value gap is down here, which I think is going to be likely our draw, but that's not what I'm looking at. I'm just looking for the liquidity right now. So I'm expecting DXY to draw lower, bonds to draw lower. Both of these are going to be pressuring ES to move up. So what am I going to look for? I'm going to look for buy side targets. So where are my targets? What are my objective levels? My objective levels are going to be this new day opening gap, this new day opening gap, the consequent encroachment of this wick, and the fill of this gap, but there's no point in marking that because that's very close to us. So, and then other than that, I'll also mark these levels as a potential area we might go to after clearing these levels up here. But right now, these levels up here would be my focus, and perhaps this daily fair value up here. That does not have to get taken though. But these levels are my main focus. Okay. And actually, you can also take the consequent encroachment of this wick as well as another level. But yeah. I'm mainly focusing on levels that are within. Right, on DXY, this would lead to a 0.74% drop. Now, theoretically, that should mean, since ES is compared to the dollar, this is obviously incorrect, but it should, because a 0.74% drop on a DXY tends to be even more than 0.74% up on ES. However, let's be conservative. So let's take 0.74%. Where is 0.74% from the current price? Precisely this level. So what's our range. What are the areas that we will want to look for targets in? Bonds are telling us from the current price we will go down 1.52% or 1.53%. So what am I going to look for? 1.53% over here. What is that? Right up there. Let me mark that. And right over here is what DXY is telling us. So what am I going to look for? Targets within this range. What are my objective targets within this range? New day opening gap, consequent encroachment of wick. This being my most aggressive target, these two being the slightly less aggressive targets. Okay, so those are my thoughts on ES. I'm hunting these buy-side targets because I believe DXY and bonds are going to be pressuring us to move up. But the way Monday ends is probably gonna the way the first trading day of the next week ends is probably gonna give me a clear bias. Because if we fill this gap in without reacting to the downside, and we do go for these buy-side targets and leave a fair value gap over here, then I will likely look for us to hunt this buy-side liquidity. However, if we trade all the way back down and retrace all of this and trade all the way back down to this high over here on the next trading day, then I will likely look for us to hunt this sell side liquidity. So what happens on this day is very important. However, I think that these targets are way more likely considering how the other charts are structured. And I don't think it's likely that we will come back down here. But we will see that at the start of the week. Anyways, I hope you guys enjoyed my take on ES, DXY, and bonds. I hope you learned a bit from this. And I hope this helps you understand how I analyze and understand the charts better. Anyways, peace.